the shooting star reversal. Yeah, that's like a check in the mail, man. That's such a good setup. Yeah, you guys do. Is Eddie here? Paul, will I get my notes ready? uh, really? It's still low? I don't know how to fix that. I need like an IT person. That stinks. Sorry, it's low on YouTube. Is it low on the in the Dropbox link? Is it low or just the YouTube? Hmm, weird. All right, let's get the recording started. But on his end says, all right. I'll try to raise my gain. Hope. I'm not sure what it is. Okay. One final mic check. Oh, look at who it is. Truett is back. Changed his handle like a man. Very nice. Going through it. Changed your handle finally. All right. Okay, guys. It is 420 Tesla Day. The 10-year 2.841 Bitcoin 41,450 Ethereum 3082. The 10-year 102 spot 24. The Dixie 100 spot 34 natural gas lower 6 spot 874. All right, we've got Dow Jones up 0.7, S&P down 0.1, Nasdaq down 1.2, Russell up 0.4. After hours highlights Tesla reporting Q1 $3.22 versus $2.15 estimated, blowing out the doors. Revenue 18.8 billion versus 17.3. Elon speaking at the earnings call. Did the earnings call happen already, or is it happening later? Well, anyways, congrats Tesla longs. Excellent. United Airlines also reporting quarter one minus 424 versus 419 earnings. Strongest demand environment in decades, according to comments. Revenue in line. Okay. All right. Well, let's go over the summary of the day. U.S. stock indices finished the session mixed among rotation into some of the more defensive names. As we saw earlier, some of these defensive names starting to look like Jinko Solar, if you ask me. Netflix, very volatile today after plunging more than 30%. Great scalper today, intraday, especially in the morning. It was just non-stop red bars for a while. Underperformance in tech, as we saw earlier, despite the rollover in U.S. Treasury yields after the 10-year hit. What do we hit? Resistance near the 3% mark. Gold giving up some ground while the dollar index moved lower. Didn't move much lower, but yeah. All right, some news highlights on the day. Not a lot going on. We had the IBM beat, the Netflix subscription, and disappointing outlook. Berkshire, excuse me. Oh, that was out the day before. Excuse me. In terms of corporate headlines and in terms of corporate headlines and macro news, we had the existing home sales that we were expecting 5.85 million. We got 577. Yeah, the petroleum report was in line, mostly expecting, except for crude. That was higher than expected, 2.4 million. Actual draw was negative 8.02. We had the beige book at 2 p.m. that was completely uneventful. Then New York Governor Hochul warned of a rising tide in COVID cases as Omicron subvariants drive spike in infections. That was on CNBC. Nobody believes her. Fed Evans out saying good to believe special factors causing inflation will stop going up. Fed to be neutral by end of the year. As far as the corporate headlines, DWAC today got a short report from Kerrisdale. President Putin, new Sarmat missile will provide food for thought for those who tried to threaten Russia, as he twirled his mustache. And IFX also citing the story saying that their interballistic missile test was underway. Israel confirming the story. Not good. Tesla and Panasonic rumored to be behind a multi-billion-dollar battery factory project with 700 million in incentives on the line in Oklahoma. That was from the Electric. Disney, Florida. Senate passed a bill to dissolve Disney District because now everything is political, apparently. Options activity. Hertz, May 25 calls, honored by the offer expiring May 20th. NU, this was on fire. Will Meade started the stampede. Famed YouTube and Twitter pumper. Will Meade, June 9 call activity, honored by the offer expiring the 17th. And then STEM, May 10 calls, expiring May 20th. The going off at 55 cents. That's the long and short of it for today. As far as the calendar for tomorrow, not a whole heck of a lot going on. I'm excited about trading Tesla tomorrow. But as far as the calendar for Thursday is concerned, not really terribly exciting. Let me go into view mode here. Okay. Got initial jobless claims at 8:30, Philadelphia Manufacturing Index, and then just nonstop bill announcements and note announcements till 1 p.m. And I guess Jerome Powell at 1. So yeah, jobless claims and Jerome Powell equals volatility, I guess. We've got Schwab investor call tomorrow, and as far as world events, not much else going on. Conferences, the NetEase Developer Summit's been a total dud, news flow wise. The Microcap Investor Conference, I'm not even touching that. Earnings tomorrow, we've got some before the market. We've got American Airlines. We have American Airlines today. No, that was UAL. AT&T. Then after the bell, ISRG. That's pretty much it. Nothing big earnings wise. The Catalyst calendar. We've got Applied Materials. They're doing a webcast presentation. Post market Snap. Oh, we have Snap. Citrix holding a special shareholder meeting. Really it. I wish we had more catalysts this week, but it's been kind of a dead week. As far as news flow, had to be on the it had to be on the. Alright, I'm just closing a few windows here. Had to be on the open house week, right? No news in a news flow room. That's pretty funny. Okay. All right. So the day today, I'll tell you guys a little bit about my day. How was your day, honey? My day was interesting. So I had Micron early on. This looked super good. I bought the dip here in Micron and scaled in here. It looked like it was going to retest high of day. I just got stopped out. It was incredibly annoying. Tesla. Uh, so Tesla. I think I bought the dip here, got stopped out. then went short, cut some nice Tesla shorts. So that was okay. And then my day really picked up when I started scalping Netflix. That was really nice. Uh, Netflix on the 2 minute was just absolute money. And then let's see, the Qs. This had some just epic trade opportunities today. The Qs just smashing these. We caught the short here. We caught the short here. Um, Caught this long. Caught the short here. I mean, it was just a amazing day. Pretty short. We caught this long at 340.50 as well. Just absolutely beautiful. Shorted this ledge breakdown right here. We were watching this breakdown. Just absolutely gorgeous. The only trade in the Qs that really was a dud today was this V bottom platform. I took a little bit in the 40s. I let this rip, and then I was in this bull flag in the money, and we had a close underneath the 21. So I stopped out, and then it ended up ripping to target. So that was the last trade of the day. It was a little annoying, but it was a small loss. Um, Overall, in terms of market condition, um, very range bound on the day, other than this big first move here, but we still managed to catch some nice moves. If you look at the bigger picture on the daily, clearly this 347.69 is the line in the sand, right? We learned that today. It was reiterated very clearly by the market, and it will continue to be. So what the market told me today is this bearish consolidation area is still a bearish consolidation, right? There are still sellers overhead into the 21. I can't draw a straight line, pardon me. Um, and the downtrend continues to be in play. The overhead supply is still an issue, and we may see more downside in a retest of the February lows. So, oh, he did. Wow, interesting. When did he sell them? Did he sell them today? No, but well, it would explain why it was so easy to short Netflix early on, Eddie. Remember how I was saying like this selling is brutal? This feels like I'm shorting Veru through here. Yeah. Yeah. Guess we can all thank Bill Ackman. Yeah. Well, this market, Louis, that's always doing what you least expect, right? So that was the day in a nutshell. Had a really fun time training with you guys today. Great ideas in the room as always. Eddie and I tend to get a little stupid when the markets are range bound and boring. So you know, it is what it is. But it was generally a fun day, and really enjoyed training with you guys. What do you guys have any questions, any comments, complaints, criticism, feedback, anything at all? Can you go over some of your NFLX shorts if you have not covered? Sure. So, okay, guys. So technically, what is this? Pop quiz, Louis. What do you call this price range? Mark D keeping it classy. So classy. The downtrend, right? For sure. Okay. is it a broad channel, a tight channel, or a full breakdown? It's bearish channel for sure. I'd call this a tight channel, right? So here's what I saw in Netflix, and this is how I traded it. Now, if you'd been Kathy, right, you would have been in Netflix from here at $350 or $370, and you would have just pressed a single button this morning. Been like, all right, I'm getting in my plans. See ya. But yeah, uh, I'm not Kathy. I didn't buy puts before earnings because I don't have a crystal ball. So the way I play a tight channel, right? The thing about a tight channel, right, is like, what are you lacking in a tight channel? Right. You guys are paying attention. Yes, exactly. You're like, how do I enter this? Because you guys have all been trained with this, right? Short here, cover here, short here, cover here, short here, cover here. Ring a bell? Yes, Mark D, exactly. It's always in short. You're in a tight channel. You don't have the opportunity to play the pivots. So I was just selling lows, selling lows, selling lows. And this chart, because of, like these, there we go. I took out the gap. These candles were, $2 each. These were not small candles. $2, $3. So I just kept selling lows, selling lows, selling lows. And the ATR of these candles is about 250, $3. So I was selling like 70% of the low or 80% of the low and covering. And I just kept on doing that over and over and over again, right? So do you guys understand? Like if these candles, right, had been doing this, right? Right, you have a broad channel with a very clearly defined trading range and pivots where you can draw a broad channel and more easily say, okay, I'm going to short here, I'm going to cover here, right? But when you have such enormous selling pressure, right, you don't get a broad channel, you get a tight channel. So, like, let's go over levels of urgency. Oh, I can't spell. Oh my God. All right, let's see. URGENC. All right, what's in terms of price action, guys? What is the first level of urgency? I was watching the tape, Brenda. You have to look at the prints. Breakout, right? What is the one distinguishing feature of a breakout? No new what? New lows. Breakdown, no new highs. Okay? So in terms of urgency, one is breakout. Two is what? Tight channel. Three, broad channel. Make sense? So here, okay, we're technically in a tight channel. We had a few new highs, but it's very, very close to a breakdown or a bearish breakout. So in that case, because there's so much selling urgency, because there's so much selling pressure, right? Selling the lows tends to work very well because when this low gets taken out, pressure begets more pressure. And because there's so much selling pressure, the likelihood of somebody coming in and covering is very low. The bears aren't afraid, right? There's too much urgency to sell here. In a broad channel, right? You have your bulls and your bears, right? The bears will short here and yawn. And they'll watch this go down. And they'll know that they're going to catch a bid at the bottom of the declining line, right? Here, you've got funds, institutions, everyone going, oh crap, oh crap, oh crap, oh my God, right? And they're just trying to get out at the best possible price. And as the price drops and it doesn't catch a bid, that selling begets more selling. No one's trying to cover their short here, right? So when you're in a tight bearish channel, which is an urgency like number two to an actual price action breakdown, taking the next 15-second low or the next 30-second low or the next minute low works really, really well. Does that make sense? Like people will often not take these trades because they don't understand what kind of price range they're in. And they treat a broad channel the same way as they would a breakdown. If you don't understand, please say so. 22 means you don't understand, or 22 means you do understand? How many candles does it take? How many candles does it take to identify the tight channel? Uh, well, technically 3. Okay, Justin says he doesn't understand. Okay. 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 So this is a channel in the queues, right? You guys all see this channel? Okay. So would you call this an uptrend or a downtrend? A downtrend. Good. Why is it a downtrend? Because we're making lower highs and lower lows, right? Everybody follow? Okay. Now what makes this a broad channel, right, is that in the pivot lows, right, and in the pivot highs, okay, I have a broad range, okay, where I have within that higher highs and higher lows. In a tight channel, I have something like this that just keeps going down incessantly, and I don't have any new highs. I just have lower lows. Maybe a little higher high eventually, but it just keeps going down. That's a sign that there's so much urgency to sell, right? That you're not even testing the top of a range on your way down. For sure, higher volatility, but also higher selling pressure, right? If the price goes down here, right, and it doesn't go back to the top of this trading range, it stays down here, it stays down here, stays down here, and then it just all of a sudden, it just really starts hugging the bottom of this trend line. What is that telling you? It's telling you that the people who are shorting the queues are so not afraid of short covering, driving price to the top of the trend line that they're staying short. Right, they expect price to go lower. So going back to Netflix, are you guys seeing a big broad channel here? Or are you guys seeing a super tight channel that goes pretty much straight down? Right, there's no covering. There's so much pressure to get out of this name that you're not putting in a range that looks like this. So what I was trying to say is when I identify a tight channel, my strategy is to just sell the lows. Because once this low is taken out, right? Okay, we're looking at 227.20, right? This low here. If this low is taken out, most likely we're going to get at least half the ATR, right? The range of this candle to the downside. And if this low is taken out and the selling pressure continues, that's the same thing that I'm counting here, etc., etc., etc. I was literally just selling the lows, the next low of each candle, making my morning. Uh, for this, I was in the 1 minute, but you can trade the 2 minute, the 5 minute, it doesn't matter. Because I was scalping, it was the 1 minute. Where do I put the stop? Typically, the top of the next candle. So here. And you might say, well, JR, that doesn't fit the 2-to-1 risk reward I was always taught. And yes, that's true. But not all price action is equal. The likelihood of this working, the probability when I'm in a tight channel after terrible news where everybody wants to get out of the stock, the likelihood of the trend changing is very low. The likelihood of this succeeding is very high. So if my risk reward is 1-to-1 and 80% of reversals fail, then what's really my risk? It's not as bad, right? This is what you were all taught. Risk, reward. But there's the big P. The big daddy is probability, right? If my risk to reward is 1-to-1 and I'm right once, look at the number of times this strategy worked. Okay, 2 minute. Sorry. The strategy worked. Say you got in here once, twice, 3 times. Here it didn't trigger. 4, 5, 6, 7, 8, but you didn't make much money. 9, 10. Here, you triggered. You may have gotten stopped out. I mean, you got a $3 move. I would have probably made money here. Let's say you wouldn't have made money here. That's 10-to-1. 11. Call this a failure. So that's 11-to-2. 13. That would have worked. 14. 15. And then guess what happened here? What didn't you make again? You didn't make any lows. So if my risk reward is 1-to-1 and I'm right 11 times and I'm wrong twice, does that look like a pretty good risk reward given the probability? You tell me. What do you guys think? If I'm right 11 times and I'm wrong twice, but my risk reward is 1-to-1, is that a pretty good strategy? Yeah, that's a pretty good strategy, right? But you can't apply this indiscriminately. It's not a formula you apply like, okay, this is my super duper indicator that I'm going to use every day, every morning, and I'm going to make money and buy myself a Ferrari. No, this is dependent on lots of things happening. First of all, what was the sentiment on Netflix like this morning? How did the market feel about Netflix? Exactly. Netflix was AIDS to the market mixed with cancer and a little plutonium on the side. Like people wanted to get rid of this thing as fast as humanly possible. What were the Qs doing through here? What were the Qs doing? What were the Qs doing? Yeah. So, market sentiment, overall market sentiment, horrific. We failed 347.69, right? And Netflix had its worst day ever, pretty much since 2011. But okay, knowing that and seeing the type of channel we're putting in price action wise, this is a good strategy for today, right? There is no free lunch. There's no easy way to trade. Trading is incredibly difficult. If anybody tries to sell you a program where they tell you this one magical strategy is going to allow you to buy Lamborghinis and airplanes with pretty girls in it, is lying to you. It's incredibly difficult and it changes all the time. You have to use your judgment and you have to read a lot of tape and look at a lot of charts to make the decision to trade this particular strategy on this particular day. It doesn't always work. The reason I had a high level of conviction was because of all the things that were coming together. Make sense? I was shorting, I was selling the bottom of the previous candle and covering about 70-80% into the ATR of the previous candle. So if this is a $2.93 candle, I'm looking for $1.50, $1.75. This is a $1.75 candle, I'm looking for 80 cents, 243. So I left money on the table there. This one didn't trigger. This body's 216, I'm looking for a dollar. I'm not trying to become a millionaire here. I don't need to catch this $35 move, although some traders do that. I was just scalping Netflix, and that's good enough for me. I was in some like decent size. I don't want to say. ATR is the average size of the candle. It's the average range of the time frame you're looking at, right? So if this candle is 281 and this candle is 180 and this candle is 219, you average the range of these candles and the preceding candles and you get a range for the move. It's very, very important to understand what ATR trading, especially if you're trading options, right? Because you have sometimes quite a spread. Like if the ATR in Tesla is $1.20 and the spread in the options is 50 cents, like how much room do you really are you giving yourself to win? You know what I mean? So you have to use ATR when you're projecting your winning move so that you can project your profits on every single short entry to a reasonable expectation. I don't care that I'm leaving a little money each time. I'm winning with consistency. um, it wasn't so expected. This market is phenomenal at punking everyone as much as possible, as often as possible. So I didn't know if the reversal was going to happen here or here or here or here or here. Like, look how overextended Netflix was. Like, it was already down 100 points at the open, right? We're taught to fade this. So no, I wasn't leaving a runner. That's not what I'm about when something's this overextended. You know what I mean? So after, so here's how the morning started. I was watching Micron. I took it here. I was in the money. It failed at 9:44, and that's when I started trading Netflix. Here, I guess. Here, got this entire move. I mean, you know, bar by bar, but it was nice. Yeah. The PT, you make a good point. Like it's really easy to look at this chart in retrospect and say you should have just ridden it for the win. Like how many of you guys would keep a short on a Netflix after it's down 100 points in the morning. Not IGI. Yeah. This was an exercise in trading what you see. And I saw like ridiculous volume and red tape taking out liquidity at the bid. So I kept shorting it until it stopped making new lows. And when it stopped making new lows, then, you know, our strategy changed. Wow, you went short yesterday and kept it overnight? Wow, good job, Z. Did better than I did then. Not call out trades, but I don't know what you mean. I don't know what you mean, CS. You want someone to show you how to execute trades? Um, we can do like a quick class on that. It's very platform dependent. What platform are you on? Toss. I'm not on Toss for training, but I'm sure there's users that can help you here. It depends on the platform and it depends on your trading style. Like if you're the kind of trader that uh, you're trading like a big midday reversal and you're gonna be sitting in that reversal for 45 minutes, it's really different from Eddie's hyper scalp type of style where he's in and out of trades within 30 seconds. I mean, I talk about reading level 2 all day, but I guess I could do it if you guys really want. You've done it, Eddie. You've crossed the Rubicon, bro. Uh, so Toss has that active trader ladder. Like they have a dome and they have buttons. I mean, I've played with it. It's okay. Yeah, some people love the ladder. Yeah, I think the problem with the ladder, it's good if you want to see like depth of market more visually, but the problem with the ladder is that it can be much slower than hotkeys in a traditional level 2 box. Yeah, yeah, toss data can be slow. If you trade TD Ameritrade, you can get like DOS Trader Pro data for it, and it's much faster. But yeah, I don't know. I don't like whatever people like to use. I never criticize. To me, DOS doesn't work for my style of trading, but there's a lot of people in this room that really like make a living out of DOS. So, oh, feeling bullish. Are you good at DOS Trader Pro with the hotkeys and everything else? Do you have experience with their hotkeys? Because I just got a Cobra trading account. I wanna play with the scripts. Can you email me? Cool. So yeah, interesting day today. Kind of a range bound mediocre day, but long in my retirement account, AMD, AMD, it's so it's in a downtrend, right? As you guys can clearly see. Uh, so there's a few worthwhile things to note here. It's broken the 50% retracement off the initial move, right? Uh, Head and shoulders, you broke the neckline, you broke the 98.70 level, and today you put in a reversal off the 8, which confirms the downtrend. Next year you got 91.57, then 85.07. The whole market, especially the semiconductors, look like they're going lower. You know, got today's another sell signal reversal and relatively high volume. So yeah, the semiconductors don't look good short term. 253 for the Qs. Oh, what's a sell setup? I don't know what an H cell setup is. Can I talk about identifying reversals in the Qs? Okay. I mean, that's kind of all we do all day. Boring, but could, I don't, what do you mean by boring, but could make a living? What you mean? Well, trading should generally be extremely boring. You should not be white knuckling it all day. You're not going to be a long-lived trader, I'll tell you that much. I gotta get some ginkgo biloba or something. Can't remember anything. Eddie could be like, bro, you stripped naked and started running around your office, yelling, "I'm a golden god," and I'd be like, wow, that's really bad. I totally believe you. I don't. Okay. 245. Oh yeah. So what I was saying is, okay. So you had the sequence, right? Rising wedge, rising wedge, rising wedge. We murdered these, and then you had a little head and shoulders here, and I was talking about this range break, right, which we broke, and then uh, the first uh, the first piercing of the 2-minute A was a shooting star reversal, and it was a shooting star reversal into the 341.54. And I was saying, this trade here you could make a living in for the rest of your life just trading this one pattern. When you have a shooting star into secondary support after a strong move and a piercing of the 8, this sell setup here is pure gold. Very, very high probability of working. So that's what I was talking about. It's just a conflagration of things, right? Like what happened here is you had this whole bearish move, right? Whole bearish move here, uh, and then the market. Like I look at these in reference to what's happening, right? It's reference to the greater auction. Like we think in terms of minutes, but the market futures traders are thinking in terms of days, weeks, and months, right? So what happened here is we had this rising wedge, first fail over the pivot, right? Falling wedge, and then they tried to rally them over 343.69. And see how violently this sold off? And they tried to rally her again. See how it sold off? And then the neckline here and the 200 were right here. So when that broke down and you were in this like super tight channel, the first what I keep on going to the 2 minute, the 1 minute, that your first piercing of the 8 is really nice because you you're piercing the 8 and you're putting that shooting star right into the pivot. Like I don't even wait for the I don't even wait for the entry bar. I just short the signal bar. I just short the top of right here on these. I feel very comfortable with them. So that's what I was talking about. Everyone's different, like Gator has his strategies that he's like super comfortable in and they work really well for him. And I've got certain things that I like that just money, like just ATM machines for me. The shooting star reversal, the falling wedges, rising wedges, like I got really good at trading those, and you got to find out what works for you really well and get really good at it. Yeah. Yeah, it's nice when you see that exhaustion through a moving average, right, Gator, and into a pivot. Like that's beautiful because you get that bounce, that short covering, and this is just bears short covering the measured move, right? And you hit that pivot, you're near that 21, you see that exhaustion coming, and it's kind of like that roller coaster when it's going up the tracks and or whatever noise it makes, and it hits that apex, and then just swishes down. It's kind of that same momentum shift into the pivot through the pattern. So I probably made the worst roller coaster noise ever, but I think you guys understand what I'm saying. Yeah. So like my goal for you guys, like I could care less whether you trade shooting stars or this pattern or that pattern. Like I want you to speak price action. I want you to speak candlesticks. I want you to learn the language of the market so that when you see trades unfold, when you see transactions unfold, you're interpreting the auctions properly, right? So, maybe you're trading a 3 minute and this doesn't manifest as a shooting star. Maybe you're trading a 5 minute. Maybe you're trading line charts or Heikin-Ashi chart. It doesn't matter. What matters is that you're understanding the language of price so that whatever strategy you employ, you're able to understand what's actually happening. I'm glad, Z. That's what I'm here to do, just help you guys out. My wisdom. Louis, I gotta get you on the phone with my wife. Be like, yeah, take out the trash more often. Dude, I'm so excited for you, Louis. That first that first withdrawal. It's very nice, man. Good job. Why I do this. Yeah, man, keep it going. Base hits, brother. Trade small, this market's hard. Right. You are smart, Gator. You have a penchant for eating crayons, but it's not your fault. I bet you Gator Gator sleeps in Marpat pattern camo pajamas. Not even multicam, just straight up Marpat. Hells yeah. I just got my bow retuned. Matthews Matrix, 80-pound draw. It's beautiful. All right, guys. Anything else you guys want to talk about? Um, those are stochastics. Uh, stochastics are a lagging momentum indicator. Little Curbster got me back into them. I used to use them back in like 2010 in this environment. Yeah, yeah, they're really, really, really helpful. Green, not greed. Nice. I'll type it out. So 1, 2, 5, 15-minute, 60-minute, and a daily. Yeah. It's helpful to, I mostly look at the 60 and the 15-minute during the day, and then I refine my entries on the 1 and the 2. But if I just had to have three charts, it would be the 15-minute, the hourly, and the 2-minute. The 5 helps a lot too. Uh, I've never heard of one good trade. Oh, is that the SMB Capital guys? Um, yeah. To hold the bid, when something holds the bid, it's holding the price, right? People are coming in bidding, holding up the price. I think that's what they're talking about. Do you use MACD? No. The here's the thing about all of those indicators. They're good auxiliary references, right? Like a guy like Little Curbster or a guy like Gator. We have some really good traders in this room. They use them as auxiliary references, and they match time frames, and like overbought levels. So they have some additional confirmation that when, say, for example, a pivot is being hit, right, that you also have confirmation in the stochastics in multiple time frames. Uh, but the problem is that they are lagging indicators, right? The only real-time indicator you have is price. So price is truth. In the end, that's the most important thing and what you should pay attention to. What prices you have and how those prices are printing. Like today, we had a valuable. Was it today or yesterday? My memory switched. Oh, today. Like we took this short, right? I sold a 50% retracement here early because I just didn't have confidence that we were going to put in a full measured move here. But here, when we sliced right through, secondary support at 341.54, the way the prints were going off, just taking liquidity, not retesting, not bouncing, that gave me confidence to hold this trade almost back to the 340.50s, right? So it's not just where price is, but how transactions are reacting in terms of bidders, uh, buyers, and sellers that gives you an idea where price is most likely to go. Stochastics don't do that. Stochastics are a lagging indicator that give you, a probabilistic outlook on overbought and oversold levels. Volume with price is incredibly important. I look at volume all day long, for sure. Oh, nice banana split. Yeah, we had some nice opportunities here today. How do you know to draw trend lines on the hourly? Well, that's like I was saying about fib and Elliott wave analysis. It's a little bit of voodoo and a little bit of voodoo and a little bit of technical analysis, right? These are the hourly levels. We called the top of the market today before the open, right? Even though the pre-market was higher, because we can look to the left, see, okay, this has been the 200. This is the hourly pivot separating this with what may end up being an island reversal, right? So we draw this line, and this morning I highlighted this line orange so you guys could see it, right? Like before the market was even open, like I posted this in the room. This line was orange, so you guys could see, like this is the line in the sand. This is the level we need to break and hold. And when we failed it, to me, the short bias was on. But you have to draw these levels based on what where your price inflection points, where they meet and where they resolve, right? Look how many times 345.81 has failed, 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 failed. This is a really important level, right? Same thing for 340.50. Bearish pattern, held, we exploded. 39.35 held, we exploded, right? So these are the price levels I draw based on, you know, what happened at these inflection points. So share my I'll share my chart layout for you guys if you want it. Asking me. Anything else, fam? Before we call it a night? Do you need all the lines? Uh, well, I need some of them. Like on a given day, like I know the range in the queues has been about $6. Well, even more lately, about $8, $9, right? So, like at the start of today, we started at 347. I knew that I needed to, be covered $6 or $7 to each side. So I knew that, probably up to 339.35 to 347.69, I needed to have those levels. And I look at them like streets in a neighborhood, right? These are addresses. These are stops on the subway, right? Broadway, Amsterdam, Columbus Avenue, Third Avenue, etc. Like these are destinations where price is going to go and most likely stop. So I'll go resistance line. So everyone's a little bit different. Eddie, can you post your little webinar on that? Eddie did a really good one. They're basically based on trend lines and inflection points. Did you have a good day, Z? Oh, that's right. I guess you did. My man. All right, guys. My pleasure. All right, guys. Have a great evening. We'll see you tomorrow. Yep, I'll upload it shortly. Love you guys. We'll see you in the morning. Take care, everyone.